Welcome back to our channel Forex Titan FX. Today, we're diving into a topic that's been on the minds of many aspiring traders out there. Should you quit your job to start trading? Segment 1. Weighing the pros and cons. Before you make any life-changing decision, like leaving your job to pursue trading full-time, it's crucial to carefully consider both the potential benefits and the risks involved. Let's take a closer look at the pros and cons of quitting your job to become a full-time trader. Pros of quitting your job. Flexibility. One of the appealing aspects of trading full-time is the flexibility it offers. You have the freedom to set your own schedule and work from wherever you choose. This flexibility can be especially advantageous for those who value autonomy and want to create their own work-life balance. Potential earnings. Another attractive aspect is the potential for substantial earnings. Stories of traders who have made significant profits can be inspiring. However, it's important to note that trading is not a guaranteed path to riches, and many traders face losses as well. Success in trading depends on a combination of skill, strategy, and market conditions. Passion pursuit. If you have a genuine passion for trading and find yourself spending a lot of time researching markets, analyzing trends, and learning about different strategies, then transitioning to full-time trading might allow you to fully immerse yourself in your passion. This can lead to a more fulfilling and engaging career. Cons of quitting your job. Financial risk. Perhaps the most significant drawback of quitting your job to become a full-time trader is the inherent financial risk. Trading involves uncertainty, and there's always the possibility of losing a substantial amount of money. It's crucial to have a solid understanding of risk management and to be prepared for both profits and losses. Skill and education. Successful trading demands a deep understanding of the markets, trading strategies, technical and fundamental analysis, and more. It's a continuous learning process, and even seasoned traders are always refining their skills. Transitioning to full-time trading without adequate knowledge can lead to poor decision-making and financial losses. Emotional pressure. Trading can be emotionally taxing, especially when your financial well-being is on the line. The pressure to perform well and the potential for losses can lead to stress, anxiety, and emotional decision-making. Emotional discipline is vital in trading, and not everyone is equipped to handle the psychological challenges it presents. As you can see, there's a lot to consider when contemplating the move from a stable job to full-time trading. The decision isn't black and white, and it's important to be realistic about the potential rewards and pitfalls. In the next segment, we'll explore how to assess your readiness for this significant career shift. Stay tuned, and let's dive deeper into what it takes to become a successful full-time trader. Segment 2. Assessing your preparedness. Before you take the leap into full-time trading, it's essential to assess your level of preparedness. Let's go through a comprehensive checklist that will help you determine whether you're truly ready to become a full-time trader. Financial cushion. Trading comes with financial risks, and there's no guarantee of consistent profits. Before you quit your job, ensure you have a substantial financial cushion. This should cover your living expenses for an extended period, including potential losses in your trading account. Being financially secure can reduce the pressure to generate quick profits. Education. Successful trading requires a strong foundation of knowledge. Have you invested enough time in learning about different trading strategies, market analysis techniques, risk management, and the psychological aspects of trading? A well-rounded education is essential to making informed decisions. Trading plan. Do you have a well-defined trading plan in place? A trading plan outlines your goals, risk tolerance, entry and exit strategies, and more. Having a clear plan can help you stay disciplined and make rational decisions rather than impulsive ones. Consistent performance. Before you transition to full-time trading, it's crucial to have a proven track record of consistent performance. Have you been trading successfully for a significant period while maintaining your job? Consistency over time demonstrates that your success isn't just a result of luck, and it's an indication that you have a strategy that works. Risk management skills. Effective risk management is a cornerstone of successful trading. Are you well versed in managing your position sizes, setting stop-loss orders, and controlling your overall risk exposure? Without proper risk management, even a string of successful trades can be wiped out by a single large loss. Emotional resilience. Trading can be emotionally challenging, particularly during periods of losses. Do you possess the emotional resilience needed to handle the ups and downs of trading? Emotional stability is essential to making rational decisions and avoiding impulsive actions. Backup plan. It's wise to have a backup plan in case trading doesn't go as expected. What will you do if you encounter prolonged losses or challenges in your trading journey? Having alternative options can provide you with a safety net and alleviate the pressure to succeed immediately. By carefully evaluating each point on this checklist, you'll gain a better understanding of your readiness to transition to full-time trading. Remember, trading is a skill that takes time and practice to develop. Rushing into it without proper preparation can lead to unnecessary risks and setbacks. In the next segment, we'll explore an alternative approach, starting as a part-time trader while maintaining your current job. This strategy can help you gradually build your skills, experience, and confidence without the full commitment of quitting your job right away. Stay tuned for more insights on making informed decisions about your trading journey. Segment 3, Finding the Middle Ground. Quitting your job isn't the only option. Many successful traders started while keeping their day jobs. Let's explore the middle ground. Part-time trading. Starting as a part-time trader allows you to maintain a stable income while learning and refining your skills. Building a track record. By maintaining your job, you can gradually build a track record of consistent profitability before considering trading full-time. Transition plan. Consider setting a target, like achieving a certain level of savings or consistent profits, before making the leap. Conclusion. In the end, the decision to quit your job and become a full-time trader is a personal one that depends on your financial situation, risk tolerance, and level of preparedness. Remember, trading is not a get-rich-quick scheme. It requires dedication, education, and resilience. Final advice. If you're passionate about trading, consider starting part-time and gradually working your way toward full-time trading. This approach can mitigate the risks and give you a better chance at long-term success. Thanks for joining us today. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more insightful content. Until next time, happy trading!